Imagine waking up tomorrow and your money is worthless. Not just losing value, worthless. The number on your bank statement means nothing. Your salary can't buy bread. The ATM won't give you cash. Your life savings, gone. This isn't a hypothetical. It happened in 2008. It happened in Argentina in 2001. It happened in Zimbabwe in 2008, when inflation hit 79.6 billion% per month. And it will happen again. When the 2008 financial crisis hit, people watched their retirement accounts evaporate. Homes became worthless. Jobs disappeared overnight. People stood in lines at ATMs that had no cash. Families traded food for fuel. Some bartered their skills just to survive. 8 million jobs vanished. $19 trillion in household wealth disappeared. The system that promised safety collapsed. But here's what most people don't know. While millions lost everything, a small group didn't. They didn't get lucky. They didn't have insider information. They simply owned the right assets. One of these assets shocked even economists. It gained value while everything else burned. Another was ignored for decades, until collapse hit, and suddenly it became more valuable than gold. A third one saved families in Argentina, Zimbabwe, and Venezuela when their currencies became toilet paper. The fourth one is so simple that most people overlook it completely. And the fifth, it's the one almost nobody prepares for. The one that separates survivors from victims. Stay until the end, because asset number 5 is the reason some people walked away from 2008 richer than when they started. This is the story of how wealth survives when everything else fails. Asset number 1, precious metals, gold and silver. During the 2008 financial crisis, while stocks crashed 57%, real estate collapsed and banks failed. Gold did something nobody expected. It went up, not by a little. Gold gained 16.33% during the worst financial crisis in 80 years. While your neighbor's house lost half its value, gold holders watched their wealth grow. But here's the part that changes everything. Gold is the only asset that isn't someone else's debt. When you own a stock, you own a piece of a company that could go bankrupt. When you own a bond, you own a promise from a government or bank that might not pay you back. When you own real estate, you depend on property taxes, insurance, and a functioning market. But gold is real money. It has no counterparty risk. It can't be printed into worthlessness. It can't be frozen by the government. It can't default. For 5,000 years, gold has been the ultimate store of value. Let's look at real examples. Zimbabwe, 2008. The government printed so much currency that a $100 trillion banknote couldn't buy a bus fare. People's life savings became worthless overnight. But those who held gold, they could trade it for food, medicine, and survival. Argentina, 2001. The peso lost 2/3 of its value in a single night. Banks froze accounts. People couldn't access their own money. But gold holders? They could trade their gold for dollars on the black market and feed their families. Venezuela, 2016, to present. Hyperinflation destroyed the bolivar. People's salaries became worthless within weeks. But gold? Gold maintained its purchasing power while the currency collapsed. Imagine being a mother in Zimbabwe in 2008. You have a small amount of gold, maybe a wedding ring, a few coins. Your country's currency is becoming worthless. Banks are closed. Stores are empty. But you can take that gold to someone who has food. You trade it. Your children eat. That gold saved lives. In Argentina, families who had converted their pesos to gold before the collapse didn't lose everything. They had something real, something that couldn't be taken away by a failing government. Gold isn't about getting rich. It's about survival. Here's where most people get this completely wrong. They think gold is an investment. They buy it hoping to sell it for more dollars later. But that's not why gold survives collapse. During normal times, people trust the system. They trust banks, governments, and currencies. Gold seems unnecessary. But the moment trust breaks down, the moment people realize the system might fail, everything changes. Suddenly, gold becomes the only thing people want. In 2008, as banks failed and the government had to bail out the financial system, gold demand exploded. People weren't thinking about returns. They were thinking about survival. Gold works because it's the asset people turn to when they stop trusting everything else. But gold has a weakness. It doesn't produce income. You can't eat it. You can't live in it. If you need cash tomorrow, you have to find someone willing to buy it. And during the worst collapses, when everyone is desperate to sell and nobody is buying, that's when the next asset becomes critical. Asset number 2, land and agricultural property. While real estate crashed during 2008, one type of property did something different: agricultural land. While suburban homes lost 50% of their value, farmland in key regions actually gained value. But it wasn't because of the real estate market. Here's the difference: suburban real estate is a luxury. When people are desperate, they don't buy houses, they sell them. But agricultural land is different. It produces food. When the economy collapses and supply chains break down, suddenly the ability to grow food becomes invaluable. Agricultural land doesn't depend on a functioning financial system. It doesn't depend on banks or credit. It depends on soil, water, and sunlight. Argentina, 2001. When the economy collapsed, soybean prices tripled over 4 years. Farmers who owned agricultural land became wealthy while everyone else suffered. The government couldn't print food. They couldn't create it out of nothing. But the land could produce it. 2008 financial crisis. While suburban real estate crashed, agricultural land in productive regions held its value because food prices remained stable. People always need to eat. Venezuela, 2016 to present. As the currency collapsed and hyperinflation destroyed savings, people who owned land that could produce food had something real. They could grow crops, trade them, and survive. Imagine being a farmer in Argentina in 2001. Your country's economy just collapsed. Banks are closed. Money is worthless. Your neighbors are losing their homes. But you own land, and that land grows soybeans. Suddenly, you're not poor. You're essential. You have something the world needs. In Venezuela, families who owned even small plots of land could grow vegetables, trade them for medicine, and survive when the currency became worthless. Land is the ultimate hedge because it produces something real. Here's where most people get this wrong. They think, land is an investment. They buy it hoping to sell it for more money later. But during collapse, land's value isn't about the price. It's about what it produces. During normal times, people value land based on location and future appreciation. It's a financial asset, but during collapse, land's value shifts. It's no longer about money. It's about survival. A suburban lot in a dying neighborhood becomes worthless, but a plot of land that can produce food becomes priceless. This is why agricultural land survived 2008 while suburban real estate crashed. But land has a critical weakness. It takes time to produce value. You can't eat a harvest tomorrow. It takes months. And during the first weeks of a collapse, when people are desperate and hungry, land won't help you survive. That's when the next asset becomes essential. Asset number 3, essential commodities and tangible goods. When Zimbabwe's currency became worthless in 2008, people couldn't buy anything with money. So they turned to something else. Tangible goods, real things. Things you could hold and trade. This asset isn't sexy. It's not talked about in financial news, but it saved more lives during the collapse than gold or real estate combined. Essential commodities are things people need to survive. Food, water, medicine, fuel, tools, seeds, batteries, soap, clothing. During normal times, these are cheap and abundant. Nobody thinks about them. But during collapse, when supply chains break down and stores are empty, these items become more valuable than gold. In Zimbabwe, a can of food was worth more than a gold coin because you could eat the food. You couldn't eat the gold. Zimbabwe, 2008. When the currency collapsed, people couldn't buy anything with money, but those who had stockpiled food, medicine, and fuel could trade them for other essentials. A person with a month's supply of food had more power than a person with $1 million in cash. Argentina, 2001. During the crisis, people created barter networks called Raid de Trek. Someone would repair a washing machine and receive 6 eggs. Someone else would do accounting and get their car fixed. Tangible goods and services became the currency. Venezuela, 2016 to present. As hyperinflation destroyed the bolivar, people traded toilet paper, medicine, and food for other necessities. Tangible goods became more valuable than currency. Imagine being in Argentina during the 2001 collapse. Banks are closed, your money is frozen, stores are shuttered, but you have a stockpile of food, medicine, and tools. Suddenly, you're not desperate. You can trade, you can survive, you can help your neighbors. In Venezuela, families who had stockpiled basic goods could trade them for medicine when someone got sick. They had power in a powerless situation. Tangible goods are the currency of collapse. Here's where most people get this completely wrong. They think commodities are an investment. They buy oil futures or agricultural contracts hoping to profit. But that's not how commodities survive collapse. During normal times, commodities are cheap and abundant. Nobody hoards them because they're easy to get. But the moment supply chains break down, everything changes. Suddenly, a case of canned food is worth more than a stock certificate. A gallon of fuel is worth more than a bond. Medicine is worth more than cash. This is why people in collapsed economies turn to barter. Because tangible goods are the only things that have real value when the financial system fails. But commodities have a critical weakness. They expire. Food spoils. Medicine loses potency. Fuel degrades. You can't stockpile indefinitely. And if you're hoarding food while your neighbors are starving, you become a target. That's when the next asset becomes your real protection. Asset number 4, skills and knowledge. This is the asset nobody talks about, but it's the one that determines who survives and who doesn't. You can't hold it. You can't trade it like gold. You can't grow it like food. But during collapse, it becomes more valuable than anything else. Skills and knowledge are the assets that produce value in any economy, collapsed or not. A doctor can treat the sick. A mechanic can fix things. A farmer can grow food. A carpenter can build shelter. A teacher can educate. A blacksmith can forge tools. During collapse, when money is worthless and supply chains are broken, these skills become the most valuable currency. You can't print skills. You can't create them out of nothing. You have to develop them over time. Argentina, 2001. During the crisis, people with practical skills thrived. Mechanics could repair cars, carpenters could build. Farmers could grow food. These people became wealthy, while white-collar workers who had no practical skills suffered. Venezuela, 2016 to present, doctors, nurses, and people with medical knowledge could trade their skills for food and survival. A person who could fix a generator had more power than a person with a bank account. 2008, financial crisis. People with practical skills, plumbers, electricians, carpenters, maintained their income and value. People with financial skills lost everything. Imagine being a skilled mechanic during a collapse. Your country's economy is destroyed. Money is worthless. But people still have cars that need fixing. You can fix them. You can trade your labor for food, shelter, and survival. Now imagine being a financial analyst. Your skills are worthless. Nobody needs financial advice when the financial system has collapsed. You have no way to survive. Skills are the ultimate survival asset because they produce value in any economy. Here's where most people get this wrong. They think education is about getting a job and making money. But during collapse, education is about survival. During normal times, people value skills based on how much money they can make. A software engineer is more valuable than a plumber because they earn more. But during collapse, the hierarchy flips. A plumber becomes more valuable than a software engineer because people need working plumbing. A farmer becomes more valuable than a banker because people need food. This is why people who develop practical skills survive collapse better than people who develop financial skills. But skills have a critical weakness. They take time to develop. You can't learn to be a doctor in a week. You can't become a skilled mechanic overnight. And if you wait until collapse happens to start learning, it's too late. That's why the fifth asset is so critical. It's the one you need to develop right now before collapse arrives. Asset number 5, networks and community. This is the asset that separates survivors from victims, and almost nobody prepares for it. You can't buy it, you can't store it, You can't trade it like gold. But during collapse, it's the only thing that matters. A network is a group of people who trust each other and help each other survive. During collapse, isolated individuals die. Communities survive. A person alone with a year's supply of food will eventually run out. But a community of 50 people with diverse skills and resources can survive indefinitely. Networks create resilience. They create redundancy. They create the ability to adapt and survive when everything else fails. Argentina, 2001. The most successful survival strategy wasn't hoarding gold or stockpiling food. It was creating barter networks, raid de trueque, where people with different skills and resources helped each other. These networks kept people alive when the financial system collapsed. Zimbabwe, 2008. Families and communities that worked together survived. Those who tried to survive alone often didn't. A person with food but no medicine dies. A community with someone who knows medicine and someone with food survives. Venezuela, 2016 to present. The people who survived the worst of the crisis were those embedded in strong communities. They shared resources, information, and skills. Isolated individuals suffered far more. Imagine being in Argentina during the 2001 collapse. You have some gold, you have some food, but you're alone. Your neighbor gets sick. You have no medicine. You can't help. You're isolated. Now imagine being part of a community. You have some gold. Your neighbor has medicine. Another neighbor is a carpenter. Another is a farmer. When someone gets sick, the community helps. When someone needs shelter, the community builds. When someone is hungry, the community shares. The person with gold but no community dies alone. The person with nothing but a strong community survives. Here's where most people get this completely wrong. They think survival is about individual preparation, stockpiling food, buying gold, learning skills. But survival is about community. During normal times, people are isolated. We live in nuclear families. We work in separate offices. We don't know our neighbors. But during collapse, isolation becomes a death sentence. Suddenly, the people around you become your lifeline. The relationships you've built become your survival network. The trust you've established becomes your currency. This is why communities that prepared together survived 2008 better than individuals who prepared alone. But networks have a critical weakness. They're fragile. They depend on trust. And when people are desperate and scared, trust breaks down. That's why building community before collapse is critical. Because once collapse happens, it's too late to build trust. So which of these assets actually performs best when everything breaks? The answer might surprise you. During hyperinflation, gold and silver win. They maintain purchasing power while currencies collapse. But tangible goods come in second because people need to eat. During banking collapse, tangible goods win. When banks fail and money becomes inaccessible, physical items you can hold and trade become essential. Gold is second because it's portable. During political chaos, skills and networks win. When governments fail and institutions collapse, the ability to produce value and the people who trust you become your survival tools. During long-term depression, land and agricultural property win. When the economy is broken for years, the ability to produce food becomes essential. Communities with land survive. Communities without it suffer. Here's the ranking that shocks most people. Number 1, networks and community. Because they enable you to leverage all the other assets. A community with diverse skills, resources, and trust can survive anything. Number 2, skills and knowledge. Because they produce value in any economy. A skilled person in a strong community is unstoppable. Number 3, tangible goods and commodities. Because they meet immediate survival needs, but they're only valuable if you have a community to trade with. Number 4, land and agricultural property. Because it produces long-term value, but it takes time and requires a community to defend and work it. Number 5, gold and silver. Because they're portable and maintain value, but they're only useful if there's someone willing to trade with you. The pattern is clear. Individual assets matter, but combined assets in a strong community? That's unstoppable. A person with gold, but no community, dies alone. A community with no gold but strong networks survives. And now comes the biggest mistake people make during collapse. Myth number 1, cash is king. This is why cash fails first. During hyperinflation, cash becomes worthless. During a banking collapse, you can't access it. During political chaos, governments freeze accounts. Cash only works when the system is functioning. The moment the system breaks, cash becomes paper. Myth number 2, banks will protect you. This is why banks don't protect you the way you think. In 2008, banks failed. In Argentina, banks froze accounts. In Zimbabwe, banks closed. In Venezuela, banks became irrelevant. Your money in a bank is a claim on a failing institution. It's not real, it's a promise. And during collapse, promises are worthless. Myth number 3, the government will help. This is why waiting for government help costs everything. During collapse, governments are overwhelmed. They can't help everyone. They're often part of the problem. The people who survived 2008, Argentina's crisis, and Venezuela's collapse didn't wait for help. They prepared. Myth number 4, diversification means stocks and bonds. This is why traditional diversification fails during collapse. Stocks crash, bonds default, real estate loses value. The assets that survive aren't in the financial system. They're outside it. Real diversification means gold, land, skills, networks, and tangible goods. It means assets that don't depend on a functioning financial system. Myth number 5, it can't happen here. This is the most dangerous myth. People in Zimbabwe thought it couldn't happen. People in Argentina thought it couldn't happen. People in 2008 thought it couldn't happen. But it did. History doesn't warn people before it repeats. Look at the pattern. 2001, Argentina collapses. People lose everything. Those who prepared survive. 2008, global financial crisis. Millions lose their homes. Those who owned gold, land, and had skills survive better. 2016 to present, Venezuela collapses. Hyperinflation destroys the currency. Those with networks, skills, and tangible goods survive. The cycle repeats. The assets that survive are always the same: gold, land, skills, networks, and tangible goods. The only variable is whether you prepared. Here's what most people don't understand. Preparing for collapse isn't about fear. It's about awareness. It's not about panic. It's about knowledge. It's not about giving up on the system. It's about not depending entirely on it. The people who survived 2008 weren't paranoid. They were informed. They understood that systems can fail, and they prepared accordingly. You don't need to become a prepper. You don't need to move to the countryside. You don't need to abandon society. You just need to build skills, learn something practical, something that produces value in any economy. Develop networks, know your neighbors, build relationships. Create a community, because isolated individuals don't survive collapse. Communities do. Own tangible assets. Some gold, some land if possible, some essential goods. Things that have value outside the financial system. Diversify outside the system. Don't put all your wealth in stocks, bonds, and bank accounts. Own things that don't depend on institutions. Educate yourself. Understand how systems work. Understand how they fail. Understand what survives. This isn't about being afraid of the future. It's about being prepared for it. When the next collapse arrives, and history suggests it will, the question isn't if assets survive. It's whether you knew which ones would. The 5 assets that survived 2008 will survive the next crisis too. Gold, land, skills, networks, tangible goods. The only question is, will you own them?